Alright guys, so let's talk about currencies today and how the US is once again freaking out. Now there are many aspects to Trump's economic war. The headlines are all about tariffs, but countries in the world they have an edge. Their financial systems are less leveraged than the US. The dollar is also the world reserve currency, so they can always weaken their own local currencies to keep their exports high. Now, many countries do it, and it's a powerful lever during this trade war. And now the US is very, very angry about it. The Treasury just came out with their first Forex report released on Thursday. Without a surprise, they blasted China for their lack of currency transparency. Basically, the US can't figure out if the RMB is too weak or too strong. And if China's RMB keeps staying low enough, their exports will outcompete the US globally. It nullifies the tariff threat to a greater degree. But Bessent also issued a dire warning to countries engaging in unfair currency practices, which is actually quite hypocritical, and it's important we understand why. The US holds the power of the reserve currency. It's still used in over 80% of global trade and is basically the linchpin of the currency trading system. Now, take the Turkish lira and the Korean won for example. It's going to be hard to find both buyers and sellers for these currencies at the same time, especially if the amount is big. And that's why lira sellers would buy dollars first and re exchange them for Korean won, but that also gives the US a crazy amount of leverage. And here's the convenient truth Bessent just isn't telling us. The US is actually the great controller of currencies. When the Fed hikes interest rates, global currencies tends to crash, and we saw this play out in 2022, 23, and 24. You can get a higher return holding US bonds, so investors dump foreign currencies and head to the dollar. Now, it's not true this time because of the tariff war. And when the US starts printing money through QE, it also causes big problems for external currencies. If the US starts dumping trillions upon trillions onto the global economy, currencies like the RMB and the yen will appreciate. China and Japan's exports will suddenly get more expensive. Finally, if the US decides to sanction a country, and if the country is small enough, its currency could collapse, which is quite easy to understand. The smaller nation can't trade with the world and its economy will crash, so demand for its local currency will also fall. That's why it's really disingenuous for Bessent to issue currency warnings to the world. They are just reacting to US economic and fiscal policies, and those are the true drivers of global exchange rates. Now, there's a deeper reason why Bessent wants countries to stop controlling their currencies. He wants to protect US exports and his own financial markets. Now, we know that the US wants the dollar to weaken to gradually strengthen their own exports. It's a big way to help Trump's reshoring plan. Now, weaker dollar allows countries to buy US exports in a cheaper way. Now, I personally feel it's not enough, but this is the direction Bessent wants to go. As a consequence, investors will then feel confident enough to buy US assets.
Golden Age America deserves a golden age economy. So for the past 100 days, we've been preparing the soil. Next, we harvest, and we want you to harvest with us. America is the Schelling point of global finance. We have the world's reserve currency and the deepest and most liquid capital markets and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you.
So the golden age of America is coming, right? Well, not if their exports crash. The US is embarking on a very big gamble in this tariff war. Trump wants the US to manufacture more, but he can't do that without getting countries to tear down their own export economy. He wants to build the tallest building by having his neighbors collapse theirs. The US trade deficit just posted a record drop in April from 138 billion to just 61 billion dollars. In other words, the US sold more to the world than what they bought. Sounds great until you realize that imports fell by an incredible 16%. Now, some are consumer goods, but many are industrial equipment as well. The front loading in March also contributed to this drop. And if this continues, especially with the steel and aluminum tariffs, things could take a sharp reverse in June. This risks high input costs down the road. Now, US production is more expensive than ever before. Exports did rise by 3%, but US goods are still too expensive. And that's why Bessent is issuing global threats for countries to strengthen their own currencies. But how does this work? Will it even work? Well, I'm glad you asked, right? The US has a really weird criteria for figuring out who's a currency manipulator or not. There are basically three items here. Now, the first is having a trade surplus with the US of at least $15 billion. So, if you're selling more to the US, it's not a good thing. That's extremely bizarre, isn't it? Now, the second is having a global account surplus above 3% of GDP. So, I guess it's wrong to be a net exporter and earn more than what you spend. Finally, there has to be a persistent one-way net forex purchases. In other words, countries buying more dollars to weaken their currencies is now a problem as well. It's just so contradictory. Doesn't Bessent want the dollar demand to remain high to protect the reserve currency? I guess just not by countries that export a ton to the US. And if you check two boxes, you are now on the watch list. If you have three boxes, the US can label you as a currency manipulator, and there are already major economies on the list. In the 2024 list, seven major economies were already there, including US friends and allies. These are Germany, Japan, Korea, and Taiwan. Of course, China is also on the list. The US didn't label them as a currency manipulator yet, but things just got spicier. In the June update, Ireland and Switzerland were added to the manipulation watch list, and going forward, we can expect more countries to be added over time. Why? Because the tariff war is going to force countries to manage their currency even further. As long as you're a net exporter, you must lower your selling price to move goods. But that's the target the US is trying to clamp down on. And Scott Bessent now has a tough warning for countries managing their own currencies. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. Really listen to this one carefully. Trump has put our trading partners on notice. Policies that incentivize an unbalanced trading relationship with the United States will no longer be accepted. And boy, does it get worse. We will increase the consequences of any manipulation designation. And this is where things get really ambiguous. What does this really mean? Will countries get sanctioned? Most probably, I believe it could result in higher tariff rates. Now, Trump will probably align this with his 2025 playbook. Countries that manipulate their currencies could face higher tariffs trying to sell into the US. And we shouldn't be surprised, should we? Bessent has been saying this for many months now. The US considers currency manipulation as a big form of egregious activity against the United States, especially for those who are big surplus countries, especially China.
We are open to critique, but we will not abide the IMF failing to critique the countries that most need it, principally surplus countries. In line with its core mandate, the IMF needs to call out countries like China that have pursued globally distorted policies and opaque currency practices for many decades. I also expect the IMF to call out unsustainable lending practices by certain creditor countries.
Now, the trade war isn't going well, especially on the tariff front. So, we can expect the US to go after countries on currencies as well. So, guys, the storm is building and it's coming. Now you might be thinking, hasn't the dollar fallen by 8 to 10% over the last 6 months? Now you're right. Won't that help US exports? It should, but it clearly isn't enough. The Challenger job cuts numbers out and it's a bloodbath. Announcements by US employers jumped by 47% year on year. In May alone, more than 93,000 jobs were cut. The worst hit were services, retail, and technology. So the biggest GDP drivers in the US are now in crisis. They are now in trouble. And as we mentioned before, tariffs don't just affect US heavy industries. Higher costs were spread across the country, across every other sector. Now, year to date, nearly 700,000 job cuts were done, the second highest since 2009, just after the housing collapse. And that's why Bessent is in panic mode. This currency strike is more desperate than preemptive. So the Titanic is starting to sink. Now, will some countries listen to Bessent and strengthen their own currencies? Now, I believe some would, but the biggest player to watch is China. I believe China will manage the RMB however they want to. They'll probably keep it within a trading band, neither too weak and not too strong as well. Now, I doubt the US will dare label Beijing as a currency manipulator because if they do, they'll have to take action. But China doesn't even care. They are still buying more gold than ever before. The PBOC just extended their gold buying streak. They bought physical bullion for 7 months in a row. Now, this is something we have covered extensively on this channel. The price doesn't matter to China. We have to say this again. The price doesn't matter to China. What's more important is securing their assets away from US counterparty risk. And that's the beauty of Chinese demand. They would rather pay a higher price, even if it's 10% or even 20% higher, than lose 100% to US sanctions. And even if Trump doesn't confiscate anything, the dollar losing value is still a problem. The PBOC bought an additional 60,000 ounces of gold in May. That's around $200 million worth. Most likely, they are rolling over US bonds that have matured into gold. But look at the world in general. Global players are adding more than 80 metric tons of bullion a month. That's an incredible $8.5 billion. And if this continues, almost $100 billion in capital will flow into the gold markets in the next 12 months. So it isn't just China buying, they know what is up. Global economies around the world, they aren't dense. Central banks around the world, they are not stupid. They can see the writing on the wall. Buying US bonds is no longer 100% a risk-free trade. You have currency depreciations, yields might even go higher as well. The big nasty bill is going to unleash a further tsunami of treasury debt into the US economy. But is China buying even more gold than we think? Well, data says that they're actually stacking more, and this is a critical point we mustn't gloss over. Most recently, Chinese numbers are just not adding up. Take March 2025 for example. The PBOC announced 3 tons of buying, but UK gold exports to China were in fact 30 tons. And the same goes for the last 5 months or so. So is Beijing declaring just a fraction of their total gold imports? Apparently, it's possible if they are held on a balance sheet of another official body. So whatever number we are seeing is but a fraction of China's true gold reserves. We must be skeptical of the official numbers, not because China is buying less, but because Beijing is buying more. They are moving away from dollar assets like never before. Now, China has many ways to buy gold, and this is a nightmare for the West because they simply can't track it. No country will tell you exactly how much gold they own, and Bessent himself hasn't really done a live stream audit of Fort Knox yet, has he? Is there really gold in the US vaults? We just don't know. But China has many avenues to accumulate gold. The PBOC is just one. China can buy more gold that's earmarked in Chinese commercial banks like ICBC or Bank of China. The government itself could be a direct customer. The Chinese military, the PLA, might also be stockpiling gold, and there's huge speculation that they are buying gold off the books. Once again, there's no concrete data available. Local governments and provinces may be accumulating gold as well. They are in charge of their own local reserves. So realize that what we are seeing is just a snapshot of what Beijing wants to show us. It's undeniable that China holds more gold than any of us think. They are simply hiding the truth. And in the first 4 months of the year, China bought nearly 15 tons of gold. This accounts for 6.8% of overall reserve assets, but I wager that the number is far higher. Whether the trade talks between the US and China succeed or not, one trend is abundantly clear. Beijing is not going to stop buying gold. They might stay silent about it or they might declare some, but the era of buying US bonds, at least for the Chinese, is over. But let me know what you think. Will Bessent really punish exporters managing their own currencies? And how far will China go in dumping dollars for gold? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.